In this episode, I'm going to be showing you guys how I learned to trade covered calls. And I want you guys to leave in the comments if this is something you would try, or if you've been trading covered calls for a while, how did you get started trading covered calls? And in case you're new here, in this series, each episode we trade YouTube strategies, common sense strategies, and the strategies that you guys leave in the comments, all in the name of learning. This is
Trading Series.
And if you don't know what a covered call is, they're basically when you lend your 100 shares of a specific stock to another trader in the form of a call option. And when you do this, you receive a premium. But the catch is you lend these shares at a specific strike price. And if your stock's price go above the strike price in which you lent your 100 shares, then no matter what, the broker will take those 100 shares from you. And if your stock's price does not surpass where you lent your shares, then you basically keep the entire premium and your shares are returned to you. Now that we got that out the way, let me take you back to where it all started. In 2019, I wanted to learn how to trade covered calls, but I didn't have a lot of money to buy a bigger name stock. And just in case something went wrong, I didn't want to lose all of my money. But I also didn't want to use a simulator because simulators just weren't very appealing to me. But what I did know is that I needed to find a stock that was fairly stable, had a large average trading volume, and a decent sized premium that I could practice with. That led me to penny stocks, and that's when I found Genius Brand. And in case you were wondering how I found this stock, I use FinViz. Let me show you how. When you go into FinViz, you're going to want to go to Screener, and then you're going to push all. And what I looked up was quite simple. I went to price and I wanted something under $2. I didn't want to spend more than $200 for 100 stocks. The next thing I went to was my average volume. I wanted something over 1 million. You always want to look for a stock that has over 1 million in average trading volume, because then it's easy to get in and it's easy to get out. It's easy to sell your shares quickly, especially if you get into shorting or if you get into a sticky situation where you just need to sell out of your position. Then I went up to option, and I want to make sure that I can trade an option on this stock, because if I can't trade an option on the stock, it's no use of me looking at it. And I went to USA because I don't feel comfortable trading foreign stocks. And if you know your industry or even your sector that you like to trade in, then feel free to look at those. But that was all that I used, and it gave me a list. All I did was just went through, looked to see which stocks were stable and which stocks were not. Now back to your regularly scheduled program. And because this is trading theory and we actually do the things that we talk about, I'm going to actually show you guys everything I learned within my first week of trading covered calls. So it's a little after 10 on Thursday, and I've been trying to buy Genius Brand all week, but the price has been holding really steady at 150 and above, which is really not a good price point to buy this particular stock. And so that brings me to my first point. Before you buy any stock at all, make sure that you know the average price that that stock goes for, so that you don't overpay in the event that that stock pulls back and does not continue on an upward trend. And I wouldn't necessarily suggest that you buy 100 shares of any penny stock unless it's solely for practice sake, like I practice with it to kind of get used to how covered calls work. But another reason is because of this. Let me show you this. Okay, can you see my screen? So Genius Brand is currently at 159. It's actually fluctuating between 159 and 158 in real time, but usually the average price is somewhere between 143 and 145. So to buy it at this price would actually be doing a disservice, and we would actually end up losing money in the end, because I guarantee you in the next week, this stock is going to go down. Now, another reason I don't necessarily suggest that you buy a penny stock unless you're going to practice is because when a penny stock goes up higher than what it usually does, it doesn't actually gain a lot of value until it goes above or gets closer to like that $2 mark there. You would actually be forced to sell in the money in order to make any type of profit. And that's not actually a bad thing if you bought this particular stock at about 143, 145, because you would still make a profit even though you are, you know, selling the money. So that's one good thing about penny stocks, is that it does make it easier for you to sell in the money if you get it at a really good price. But I guess that's a good thing about any stock. As long as you get it at a good price, you can always sell in the money if you know the patterns. That brings us to number two. Number two. Know the pattern. Before you sell a covered call on your stock, make sure you know what the patterns of that stock are, so that you know if you can sell in the money. Because if you can sell in the money, then you can actually be quite profitable, and you can actually earn way more than you would on just that premium that you would receive for selling that cover call. You would actually earn a profit for actually having that call exercise. Can you stop that? And then the third thing that I would say is make sure that you know if your stock is where are you getting this paper from? So that's the third thing. If your stock is a dividend stock, make sure you know when those dividends are paid out, and make sure you know when earnings come out for any stock that you get, dividend or not, because you do not want to sell. Let me say that again. You do not want to sell your options near either dividend time or earnings, especially if you're new to cover calls, because it's extremely risky and you can lose a lot of money. And so the last rule, just know your average cost. So I actually have 100 shares of SQQQ, and my average cost is somewhere between $10 and $11. And so right now, SQQ has really been beaten down. And I'm still selling covered calls against these shares because it's helping me recoup some of my money. However, I know that because my average cost is so high above where the stock price is right now, I can't sell my covered calls at $8. I have to sell it in a safe zone, which is like 8.5. So just be mindful of those things. Make sure you know if your stock is a dividend stock, when those dividends come out, when earnings come out, what are the patterns for your specific stock. And always make sure that you buy your stock at a reasonable price. Never buy at the high. And that is all for this video. If you have any additional questions, leave them down in the comments and I'll be sure to get back to you. Bye.